Hello and welcome to the Digital Digest, your weekly breakfast of insights, tips, and tricks and general information that will help anyone trying to move things forward in the digital world of accounting. As always, we're brought to you by the Digital Disruptors, who are pushing the boundaries in the digital accountancy space. I'm your host for this episode, and we're going to be talking about AI and the new OCR tools that are in the marketplace. Lucky enough to be joined by Nikolai from Genesis, and I've also got my co-host Ryan as well. And we're going to go through a fairly busy agenda in the next 20 minutes or so, just to get into the detail of what's happening in these new tools and why they differentiate themselves from the traditional stuff that we're so used to on the market. So let's get into it. So Nikolai, welcome to the Digital Digest and everything else, and it's great to have you
Thank
on.
you.
I wonder, for anyone that hasn't heard about Jack and hasn't heard about Genesis, wonder if you could just give us a quick intro and just tell us a little bit more about what you're building at the moment.
Yeah, thanks, and morning, everybody. Jack is a bookkeeper that's designed to complete probably around 85 to 90% of the extraction, but also the compliance tasks. So it's shifting the primary role of your experts in the business from being operators of tools to actually just validating data and being able to move on to what does that data mean.
Cool, that sounds great. And of course, you've got AI in the name, which I think as a tech business created in the last couple of years, you've got to have AI in the name somewhere,
Oh yeah,
haven't you?
and we'll have to drop it in 3 years' time too, something like that.
Excellent. Well, I wonder if you could maybe just talk a little bit about what the AI that you're building actually does. And I know you talked about the fact that Jack is effectively a bookkeeper, but let's get under the hood and talk about machine learning and LLMs and whatever else you want to throw into the mix.
Oh wow, this is awesome. Okay, so at its foundation, Jack has got a vector database, which is different to usual table-based database technology. And so, what it is designed to do is to hold a huge amount of information, akin to the human brain in a way. We're not aware of a filing system in our brain; it just sort of seems to be accessible. And so a vector database has been built to imitate that, and that's the core at the bottom of kind of every LLM and most specialist AI systems. And that holds context. And so when you try and upload something or you do something, it will take all of that context and it will use it to do a task. Above that, there are the actual LLMs. Now, this is where the language controllers use. This is where there's a layer of logic to say, oh, what's the next best word? Now, LLMs have become fabulously famous because of ChatGPT having LLMs, and most of them all have it. But they're all logic, primarily language driven, and then we're slowly but surely giving them more and more skills. One of the skills that LLMs have not been as successful at in these early years has been numbers or doing calculations. So that's always been a risk. And then we've got this vision layer. So it's called an LVLM, Large Vision Language Model. And it's essentially the principles of computer vision that has come out of really autonomous cars and the LLM, and it's been smashed together. And so we operate a 24 billion parameter LVLM, which we've built ourselves. It took us 7 months. And there's a few reasons for doing that. One is just that we don't want to be vulnerable to any changes or collapses in any of the AI companies that are sort of trailblazing, but still heavily loss making. We also don't want to be vulnerable to them putting up prices, which would have just a direct flow-on effect. So we retain a little bit more control. But the biggest one for us is this context window. And so it's a number which is talked about in thousands, so like a 8K or a 16K context window. But we've got the ability so we currently run a 120K context window. And so and as Jack learns about each client, so that context window is actually going to grow. And then kind of at the top of the stack, whilst there's a piece of software, the learning that Jack has at its core is actually only legislation, standards, quite a bit of it's read a lot of articles from the industry, so a lot of stuff that's been published by large companies in the space who publicly allow their content to be out there. It's all advice. But Jack only learns how you code and all the nuances of how you manage a client's chart of accounts after you connect for the first time. it doesn't actually have this big language model with massive training and massive cost that needs to be sort of absorbed into the price. And so yeah, it just means that no financial data is shared between clients, or like between practices. At the same time, if you've got two clients that have got similar reasons why they use FedEx and the post office, training one is not actually going to benefit the other client. But that's this principle of separation of data, and that's
Yeah.
why we've had to build our own stack, so that we're not shipping off your client's data, off into the public cloud.
And that's really interesting, right? Is that, if we compare you to, say, someone like Dex, who's probably still the market leading kind of OCR extraction technology in the UK at least, it's well known that what they've done is use that massive volume of data that they've got to do exactly what you just said, in terms of like if an invoice comes in from the post office or from UPS or whoever, that will get put into postage, carriage, shipping, whatever the nominal code is, and they've kind of learned that. But of course, businesses aren't generic, they aren't all the same and homogenous, and sometimes they will want to put that somewhere else. And I guess that's what you're talking about here, is like Jack can pick that up and pick that nuance up and go, actually, yeah, in the normal course of business that would probably go to carriage, but actually in this case we're going to put it to, I don't know, direct costs, for example.
Yeah, so lots of people talk about ML, machine learning, and machine learning is there to do a faster job than humans of sort of guiding a rule. So in Dext, and with most of the tools that we use, like and in Xero, Sage, QuickBooks, etc., like you can set rules, right? You can create them, then you have to manage them. And so all the primary role of ML in this particular use case is to create a set of rules. The risk is that when you get variance, and so if you've created a rule, you have to spot that there's a change, and then you have to like make an exception, like change something. With ML, it's not sort of going back to first principles at the start of every transaction, and so it's just going to apply like the same as it's always done. And so that's fine if like we've been doing this for years, and we don't actually capture a lot of detail. So quite often, like the line items, what actually is the line item? We've obviously had a lot of instances where a practice has joined, and they've usually had Xero open alongside, just check Jack's work, and spotted that there's been one single nominal code used, which was only actually relevant to one of like four. In this particular case, I'm thinking of one of 4 line items, and so the other 3 line items they've not been reported correctly. One of them did actually have a different VAT treatment, and so it's possible to get that level of detail, and so getting that makes it searchable, usable. It's going to improve the reporting that we can do. It's going to build new sort of ways of providing some advisory services, because quite often you can't really expect someone to want to pay you a fortune more for just reading what's actually on the management accounts. Like, oh, I can see that you spent more than you did last month on travel. Like, you don't need to pay to be told that. We don't want to insult clients' intelligence. Like, they can read the comparison. So but what did you spend that difference on? Like, where was it actually, without you having to go back to all those original invoices and like find the needle in haystack? So
Yeah,
that's the opportunity to also to change and adapt. So we're excited about the space.
Sounds really interesting. I know I'm just going to bring Ryan in, because I mean I know that we've quite often talked about using OCR products and the line item extraction, and whether or not there's any real value in that, because sometimes you just end up with a lot of noise. You end up with a challenge around how you then populate products like Xero, QuickBooks and stuff, and whether you're going to hit the volume limits and stuff. But Ryan, I mean, we've seen it all, haven't we? From nondescript extraction to crazy levels of detail, but not really anything much useful out of that.
No, and I think the challenge is getting the balance right. There's certain things that you always want the detail on, like especially in a bigger firm when you've got a tax department, they're always going to go, well, what's this professional fee to do with? What's this asset purchase? You'll need the detail kind of pulling through. But for, cost of sales, if you've got the attachment in there, most of the time, as long as you've got the overview information, that's what's important. But I guess the The bit that I'm interested in is that if we look at the traditional machine learning style OCR systems, they have such a low auto-publish rate because people just don't trust that they're going to go into the right place, especially on those nuances, right, where it's slightly out of the norm. I think it's way below 5%, I believe, on the standard auto-publish rates. And what I guess is more exciting about the new wave, the likes of Jack, is that it should shift the needle on the auto-publish. And if that's happening, then we're massively reducing our time. I think we've got to that level with the traditional OCR systems in that we've kind of pushed it to where accountants feel comfortable, and it's not progressed now for a few years. In the new wave, I guess Jack not being the only one in this space is kind of redefining how the engine is now identifying the information, and therefore should build trust over time. Is that kind of your vision with this, Nikolai?
So yeah, like there's a fundamental change in tech, right? So like we started with OMR, optical mark recognition, where do you remember those old forms that had a line around the box and you had to write like the letter in the box, right? You remember those? Yeah. So that was the original OMR. Now that preceded OCR as we know it today. It's still a lot more accurate because it's got a defined box, and it's actually that tech which inspired the RPA industry, and so there's a really tight relationship there. OCR looks at, I will recognize the character. Right now, there's only 26 characters in our alphabet, which is also why OCR doesn't work spectacularly well with some really interesting languages out there that just don't have like a C like this. And it's recognizing the character, and then yes, you can use MR models and you can train them to be like, okay, these characters you put to this so that you can actually produce like a nice front end that someone goes, oh, I can read this supplier name. And the issue is that it can only detect those characters. ICR, like it really just was about saying, okay, companies are annoyingly using different fonts, and so OCR tech like can only really handle like about 7 basic web fonts, like the 7 core web fonts. And so if you get any cool companies that are using their fonts as part of their brand, like OCR is going to battle a little bit more. So that's just super annoying because there's always going to be a few out there. And then it's about detecting images. And so what we tried actually with the Jack 1 model, which we had last year, which we had a bit of testing on, and we showed a lot of people that conceptually how this is meant to work, and that used ICR technology. And we still had too many limitations. Like it still required too many human inputs, and it was this trust issue that you pointed out, Ryan. And by the way, 5%, I had no idea it was that low. I might use that in future.
Maybe we should verify that.
Trust but verify, right?
Any stat said with confidence is always a fact, right?
Yeah. And so we have no OCR. We don't detect characters. We actually use computer vision models, which is like uploading a picture, and you can upload 20 pictures and say find the cat. So it's not trying to read the letters; it's actually writing a description of what it can see. And our challenge over the last 2 years is to build this prompt, and lots of people talk about prompt engineering, like it's really important to write a great prompt to get really great results out of AI. And so our prompt actually runs at about 8 A4 pages in 12-point font, to give you an idea of like how extreme this has become. So that every transaction, there's this incredible prompt that is describing in minute detail like what you're looking for to produce a compliant like reconciliation. And that's the difference. Which, yeah, it's so far so good. I'd probably say like one in 5 customers at the moment like don't get a fabulous experience on the first time. Like this is bleeding edge tech. Quite happy to be like, yeah, that's about the rate, which is fine. which is fine at this stage because there's a lot of people out there that are being really like gracious with their time and their patience with us. But we can fix the stuff where Jack fails spectacularly. But the 4 out of 5 times, Jack is succeeding spectacularly well. And so there's not a lot of middle ground. We're not seeing that anyway, where it's like it's an incremental improvement. So we're really happy. Like this is a really big step change.
And I saw on LinkedIn that you posted that you were out with David Addison, one of my mates, and doing some testing with him the other day. And maybe you could give us a few just examples of what it is that you're able to do. And maybe, if you don't mind, maybe just give us some of the examples where it does spectacularly fail and maybe why you think it is doing that at the moment.
Yes, you saw on LinkedIn, like this is Jack.
Nice.
One of a kind Teddy. It goes with to onboardings, and I make a joke that the onboarding session is now open. It's a bit like the mace at Parliament. So yeah, we were with David yesterday. We had a fabulous time. If you have a look on my LinkedIn, there's some pictures of his moo and Jack having a chin wag over our predictions of what's going to be in the budget at the end of the month. And yeah, they also onboarded. But we took no photos of the humans. So the examples of where it does really well, there's a lot more detail when it comes to the line items. So every single line item, the description, so things like descriptions that are spread over multiple lines, get captured into one. But each description has its own VAT treatment, its own nominal code, its own tracking categories. Tracking categories, for example, are where we're seeing some really awesome success, where if there's any clue, including a handwritten clue on an invoice as to like that there's a relationship to a tracking category, Jack's been pretty good at selecting those. It's also been really good at selecting like, has this invoice actually been paid or is it unpaid, and kind of setting the like a workflow that's then going to appear after that. Things like being able to extract the VAT number and validate that there is a VAT number. We're also doing things like taking the supplier, the billing, the delivery addresses, and also bank information that's printed on invoices. And you know, some invoices when they're paid, they'll have like paid by card, MasterCard, XXX, and then 4 numbers for the last 4 digits. So Jack's extracting all of that at the moment, which will power our bank reconciliation product that will come out in a couple of months. And so that's where we're seeing huge success, right? Where it's getting all of that data. Like we've got a reason for that. There's a lot of clues where you get like fraudulent attempts to slide an invoice in. It's especially vulnerable if you use email in services, because it doesn't take a genius to work out sometimes like what the email address is. And I think the risk is that we don't know if ever there's been invoices that have slid through the system and been paid accidentally. It seems quite a few people that we talk to, like they've all got a story of where this has happened in the past to them. The stuff that Jack gets wrong, so at the moment, like VAT is the most delicate, and so we're probably around 70-75% there on Jack's training of realizing like the difference between no VAT and exempt, and so that relationship is really understanding the context of the description.
I think there's quite a lot of humans still don't get that.
Yeah. I actually, so on this point, I had a fascinating experience probably around 3 weeks ago, where Jack published a VAT position, because it will never show like sort of the generic extracted number, right? So, and essentially the human just needs to make a decision. It'll take a position, but the person reviewing was actually a little bit like, oh, I'm not sure now. I thought it was this. So it was an interesting moment, and because of that, so this person then went to Google, did a search, and started looking through, like there's 15 publications from the likes of your firms that are writing like this is what the opinion should be, as opposed to like going straight to the legislation and like what does that say. And so we're building a modal that's going to pop up when you hover over VAT and the nominal code, because those are really those 2 variables that are really important to get consistency and accuracy. And it's going to pop up, and Jack will have pre-written its advice of like why it selected what it did, and it's going to reference the legislation for VAT, and on the account code it's going to reference like historical invoices that like support this position or identify where there's contradictions. And so that's like, that doesn't exist in the product yet, but conceptually it's been really well received. And and I think it's going to be important. We've actually held off sort of putting a blank screen and saying, hey, ask AI a question, ask Jack a question, because I just don't think that's not going to be part of daily workflow. I think that we can use our keyboards and get around, and like we know what we're doing, right? We don't need to really ask it a question like, oh, can you please post this to, whatever, cost us a good sold.
I think that's really cool that you're putting those kind of the verification, right, of why you're doing certain treatment. In a way, you're going to probably not correctly, but educate us as we kind of learn the VAT system. But the bit I think is really cool is that you're getting the tracking category, the department information really correct, because so many businesses now really want that granularity, but it just prevents automation in the outsourcing department with the traditional systems. Because as soon as you get a department, you're like, well, every invoice now I have to stop. I can't do like auto publishing. I have to stop, review it, then allocate. Yep. If you're able to pick that stuff up, when all of that kind of automation benefits we were getting for those simple businesses, we can apply to the more complex ones. And therefore, once again, maybe not price, but margin should increase for the outsourcing departments.
Yeah, I hope so. And I do admit that the adoption of tech like Jack and what's under the hood, for some people will actually feel like half a step back, because if you've invested a lot in rules, you're going to feel like, oh my gosh, because what we're saying to you is, hey, for the first like 2 to 3 weeks, you shouldn't, we've actually got the publish to the accounting platform button turned off. Like, we need you to start to build trust, because we've been using Jack for a while, but you very quickly see Jack's logic at work. And so you can spot and have confidence in like what Jack regularly gets right, what Jack regularly gets wrong. And when it's getting it wrong, you're needing to correct it. And it's taking between 2 and 3 training runs to get that data then right, because it's not a rule. Jack learns it in the same way that, if you employed a bookkeeper for every single one of your clients and that's what they're focused on, like, they're going to learn much faster than if they were trying to work across 30 different clients. And so that's kind of the effect of Jack, is your time to correct becomes an investment as opposed to just a task that you move on, that you kind of go back to square one every month.
Yeah, sounds really interesting. And I mean, Indy and I like to refer to Ryan's bald head as like the crystal ball of accounting tech. So just to wrap up, I'm just going to hand over to Ryan, because I know he's got maybe one or two final questions just to see what's going on in the world.
I'm glad you called it that. I mean, look, where do we think this tech can go? I mean, one, we've talked about it, it's the automation, it's the trust. But I think partly we've got so much inconsistency throughout bookkeeping data, throughout any business really, inside a business and then across businesses. And I think as you get that ability to the system learn and maybe even re-educate itself back into an overall engine, going, well, in this industry, generally 99% of the time they'll put these transactions here. Not machine learning, but just re-educating, right? We're gonna be able to proliferate and completely fully automate, in my opinion, the purchase management system. So I know outsourcing is a huge thing, but still, you're still going to need to tweak. You're still going to have those refinements, and every business will have those nuances, and you need to build those in. But that's where I see this going. It's something they talked about. I remember going to a Xerocon years ago, possibly even a decade ago. It feels that long. Where they went, I think they were like about to buy HubDoc or something. They said, we're going to automate the entire of purchasing. I feel that only with this tech have we got the chance to do it. That's where I think we're going.
Yeah, Ryan, you're gonna take a risk and put a timeline on your prediction there. When do you think the first firm in the UK is gonna claim they've got like full automation with accountability from AI?
When are they going to claim that they can do it? Probably next year. When are they going to be able to do it?
Already. Surely it's already, right? There's bound to be a firm that like last year was like, yeah, we're all over it. We've done it. We've done it already.
It's like all those fully AI businesses, accounting firms over in the US that actually have just outsourced everything to a different country. So I think that realistically, we're probably a good 2 to 3 years off that. So I would say like maybe 2027, 2028 is when it will start. To get through the entire industry, you're looking for at least another 10 years past that, because there's just so many laggards that take forever to change the way they work. But I think it feels like we're on a cusp of a lot of things with the culmination of cloud and AI. And I think this space, especially with the likes of what you're doing, feels like it's closer than some of the others.
Yeah, no, I would probably trim about like 6 to 12 months off your prediction. But then I've got the benefit of seeing a little deeper into like what we're building, and
you also have to be confident with what you're doing, Nikolai. I'm a skeptic, so
by
heart, I'm like,
well,
it's going to take longer.
I'll tell you what, if anyone recalls, like earlier this year at the Digital Accountancy Show, I was on stage with a couple of friends and Lisa was interviewing us, and she was like, "What's your prediction for 12 months' time?" And so I believe that there's going to be a rerun of that panel where we're all going to get to sort of lift the hood and be like, how
was your
accurate
prediction?
or how...
Was your prediction? Oh, we'll probably be building Jack 3.0 at that point. It's just many iterations of Jack.
we probably will, or have started already. But I predicted that we wouldn't actually have a fundamental change from where we were the 12 months before. But that my wish is actually we're starting to get a little bit closer to seeing the management account, like the MI position, a little more in real time, as opposed to sort of waiting like a couple of weeks after month end, so that clients can get a better idea of their real time cash balance. Like that's what I'm interested in. The steps that we take improving. And so I think that April's, what's that, 1st and 2nd of April Daz is on.
Yep.
So that's an unsponsored like plug for Daz. But
there's a couple of grand off your stand now, Nikolai.
Man, give me a call, bro. But no, I think that there's still some time to go. We've got peak to get through for everybody. So I think that there's a few of us that have got the winter to build and like improve and just tighten up things. So I'm pretty optimistic about like late February and what we can bring back to the market. And yeah, of course, I want to fulfill my prediction from 12 months ago. So that's not going to completely and utterly skew my decision making at all.
I love that. Well, I think that feels like a really great place to wrap up this week's show. Thank you, Nikolai, for joining us, and I wish you every success with Genesis and with rolling out Jack to the great and the good of the accounting world, and getting all of that testing and implementation work right. We'll see if you can close the gap on that remaining sort of 20-25% or whatever that you just need to start getting right. And hopefully for anyone that's been watching, I hope this episode has provided you with valuable insights so you can take forward. Of course, feel free to reach out to Nikolai. He's all over LinkedIn, so you'll see him pretty much every day on there. And look, check out the show notes. There'll be links in there for Digital Disruptors and anything else that we've talked about. And if you want to ensure that you catch future episodes, please make sure you subscribe to our YouTube channel, follow us on LinkedIn, follow us on all the socials, and make sure to look out for the next release on a Thursday morning. And we look forward to speaking to you next week.
Cheers, John. See you, man. Cheers, Ryan.
Thanks very much.